TV18.
That's the first take on the index. The Nifty is absolutely flat with a bit of a positive bias, you'd have to say, 10 points higher.
Flat on the benchmark indices. The Nifty is just down 9 points.
As far as the Nifty is concerned, it has seen a sharp recovery from the lows. It's down 40 points as we speak.
This is the fourth session in a row in which we are basically within that huge budget day range.
All in all, a very lackluster kind of a day, whether you're looking at the mid-cap market or the Nifty. But I guess investors will take heart from the fact that at least there was no caving in. Around 1 o'clock, it seemed like there was a big move down. But from there, at least, we saw some recovery to close at the flat line.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the evening. It's a late recovery which helps Indian indices close with minor cuts. The Nifty and the sensex fall 0.25% each. Bank stocks lead the pack with the index outperforming the benchmarks. Tata Steel loses 6% as pressure in Europe hurts profitability, while weak sales and a sharp dip in margins of Novelis hurts Hindalco. Adani stocks see a reversal of their selling streak. Adani Transmission's strong quarterly performance surprises, while Adani Ports posts a muted quarter. Missing estimates, however, the management maintains its guidance for FY23. Paytm jumps 5% following an upbeat conference call and a potential ban on other lending apps. Meanwhile, Vedanta recovers after slipping in trade following the government's opposition to Hindustan Zinc's buyout of the company's global zinc assets. That's a CNBC TV18 exclusive. And in mid-cap earnings, Muthoot Finance slips on posting a weak assets under management growth, while a sharp contraction in margins hurts Balaji Amines. All right, well, here's a lineup of what we have in store for you. We bring you expert opinion from Krishna Kumar Karwa, who's the MD of MK Global, and the big corporate voice on the show today is Tata Steel MD. All right, let's begin with the day's market action. The Lal Street recovered from intraday lows to end with minor cuts. The Nifty and the Sensex fell 0.25%, but the banks outperformed. The index ending 0.25% in the green. Meanwhile, mid-caps ended the day flat with a slight negative bias. Prashant Nair is here with the details.
Well, it was a subdued session once again, and for the fourth day in a row, the Nifty has been between the high and the low of the budget day, and I think that is quite remarkable. After all of the volatility, and these have been volatile days over the last few, the range has not been broken. The low was, 17,353. The high was about 17,900 plus something. And we've been within this range for the last 4 trading sessions now. Banks have done better. I mean, the Nifty was down. The Bank Nifty was actually up about 0.25%, even after giving back some gains in the last 30 minutes of trade. The losses coming through in metals, which lost Tata Steel, Hindalco reacting to earnings. ITC came under a bit of selling pressure, profit-taking largely. Nifty gains, the Adani stocks did well. I mean, Adani Enterprises recovered 400 rupees from the day's low, and it ended about 14% higher. It's a Nifty stock. Adani Ports was up. And of course, Adani Ambuja Cement, which reported numbers in the last hour, was higher as well. Banks, as I said, so Kotak Bank has broken out of a falling trend line. That was a top gainer. You had IndusInd and Bajaj Finance, which picked up some of the slack in that space. Advanced decline was negative, so losers outnumbered gainers. But the fact is, what went up, and that list of what went up was basically populated with names which had volumes behind them. So I'm going to start there. Paytm. There was, of course, profitability ahead of the guidance from the company. Adani Wilmar looked up. Varun Beverages, has recovered 200 rupees in 2 sessions after the numbers beat expectations. Gland Pharma, Zomato, Action Construction, IRB Infrastructure are a few other names. So broader markets, lots of action. The indices remain range-bound. I think from a global perspective, the Fed Chair, Jerome Powell, will speak, and I think global markets will be fixated on what he has to say about the very strong jobs data that we got last Friday. Back to you.
Okay, all right, Prashant. Thanks very much for that. That's on the markets. But let's get in some perspective then. Krishna Kumar Karwa of MK expects the markets to remain volatile. He adds that many bank stocks have attractive valuations.
I think as we had anticipated also, we expected the markets to be volatile and primarily driven by global flows. And we have seen that in the last 1 month also, almost 25,000-30,000 crores of FPI selling which has happened. So I think, and that money has possibly gone in other emerging markets like China, etc. SBI selling, which continues to be unabated. Now, they also own a significant part of these positions in these banks. So we are continuously seeing a selling. From a fundamental perspective, I think credit growth is kind of a given, but I think the challenge that many of the banks are facing is as far as ability to raise deposits. So I think individual banks who are in a stronger position to raise cost-effective deposits, they should possibly do well. So yes, valuations of many of these banks are attractive, but the challenge is on technical fronts because of the over ownership. Now, within the banking system, yes, public sector banks did do well, and then there was this challenges. I think most of the banks have come out with their disclosures on whatever exposures that they have.
All right, let's get to the second headline now. Tata Steel saw its net loss widen to over 2,500 crores in the third quarter. This can be attributed to a deferred expense for insurance cover of UK employees. The overall expense due to liabilities in the UK was more than 2,150 crores. Nigel D'Souza is here with the details on this.
Well, Tata Steel's numbers were disappointing. The consolidated EBITDA missed expectations by close to around 20%. We were expecting a number of close to around 5,000 crores, but it came in closer to around 4,000 crores. And on both the geographies, whether it's India or Europe, they missed expectations. On India, there was some improvement on a sequential basis, but it fell short of our 12,000 rupees per ton estimate, came at around 10,500 rupees per ton. And on Europe, the losses was more than expected, because you're not generating that much of cash. That's why there's no debt reduction. In fact, the debt was flattish on a sequential basis. We spoke to the management, and a few key highlights were that Europe is likely to see troubled times for a couple of more quarters. So 1 quarter done, 2 more quarters of pain before they break even. The losses, though, in the European business could come down to around $50 per ton from around $95 per ton. The India business, there'll be some improvement because realizations will be higher and they'll get some benefit of lower input costs. So maybe closer to around 12,500 rupees per ton is what the India EBITDA per ton could move to. And debt reduction, there won't be any major debt reduction in FY23, but they continue to guide that in FY24, the debt should reduce by around $1 billion odd. On that note, let's hear out what the management had to tell me earlier today.
So you will see the negative EBITDA that we are seeing in Europe in Q3 reduce in Q4. We are not fully out of the woods yet because the demand in Europe is still a bit fragile. Q4 volumes will be higher than Q3 volumes, both in India and in Europe. So we have 500,000 tons of extra volume coming in Q4 compared to Q3. Despite all these challenges and the bad set of numbers, if you see the debt has stayed where it is at 71,000 crores, it has not gone up. This year, obviously, we also had to contend with the 12,000 crore acquisition of Neelachal, plus a lot of money which got stuck in working capital because of high input costs as well as the stock buildup in Netherlands. So we'll be releasing that cash for next year. Obviously, next year is a year when we'll get back on track and we want to continue with our focus on debt reduction.
All right, that's on Tata Steel, but let's move to another nifty stock. Bharti Airtel has reported what was a largely steady third quarter. Revenue growth is above estimates, but profits have missed expectations. The average revenue per user has grown to around 193 rupees. Reema Tendulkar is here with a review.
Thanks so much for that. So Bharti Airtel just reported their Q3 numbers and the bottom line has been a miss. The company has reported a profit of 1,588 crore. This falls short of our expectations of more than 2,000 crore, and it's also a decline of 25% on a year-on-year, on a quarter-on-quarter basis. The reason is the company has taken an exceptional charge of 670 crore on account of provision for license fee related to earlier periods in one of the group's wholly owned subsidiaries. Stripped of that, the consolidated numbers are largely in line with street expectations. Now remember, Bharti Airtel's numbers are a combination of the Africa business, about 30% of their revenues and EBITDA, for which the numbers were already known, and the balance is their India business. They've also got mobile in that, they've got homes, they've got a B2B enterprise business as well. So let's focus on the mobile business. Now, no surprises there. It's largely in line with expectations and very similar to what its competitor and peer Reliance Jio reported numbers a couple of weeks back. So the India mobile revenue growth is 1.2% quarter on quarter. EBITDA margins have expanded by 140 basis points on a sequential basis. The street was anticipating a margin expansion for the India mobile business because the spectrum usage charge has come down. The other two internals that we track very closely also tracking in line. So subscriber growth is now at 4.4 million on a quarter-on-quarter basis, and ARPUs have gone up by 1.5%. It now stands at 193 versus 190. Remember, there is no tariff hike, which is boosting the ARPU increase, but you are seeing a natural migration of 2G customers to 4G. People are moving up the value packs, and that's the reason why the ARPU for Bharti Airtel has been steadily improving. The debt is flat on a quarter-on-quarter basis, and that's a positive. It stands at just over 2 lakh crore rupees.
Okay, all right, Reema, thanks very much for that. So that's on Bharti Airtel. But let's move to the third headline that we're tracking today. Adani stocks saw reversal of their selling streak. Today, Adani Transmission reported what was a strong quarter, while Adani Ports posted what was a muted quarter, missing estimates. Vivek Iyer is tracking this story. He joins in with more.
Well, that's right. Despite the volatility that we have seen, actually, if you're talking about some of the stock moves, especially from recent lows, there has been quite a sharp up move in some of the stocks, especially if you're talking about the stocks that are present in the F&O segment as far as the Adani Group is concerned. So Adani Enterprises up over 75, almost 80% higher from the recent intraday low is the one that we are talking about. Adani Ports up over 45%, Ambuja Cement up over 20%, and ACC up over 17%. From the recent intraday lows. As far as the cash segment is concerned, today a lot of the stocks that were earlier posted on the lower circuit today managed to hit their upper circuit and once again saw a steep sell-off. So the volatility as far as the cash segment is there continues. Now talking about the operational results that have come in Q3, Adani Transmission delivered a strong operational performance. Profitability went up almost 75% on a year-on-year basis. Adani Port some time ago delivered its results. While it was a miss as far as our estimates were concerned, management reiterated its full year guidance as far as the revenue as well as the EBITDA numbers were concerned. A couple of other stocks will also be declaring their results today. So Ambuja Cement, Adani Green as well as NDTV, we are watching out for those results. Yesterday, some positive news flow coming in. The promoters said that they are going to reduce the pledge shareholding in 3 group companies. So Adani Ports, Adani Green and Adani Transmission, you're going to see pledge or promoter pledge shareholding come down quite significantly. And very importantly, tomorrow, Ambuja Cement post today's earnings will be having an analyst and an institutional investor call tomorrow, where Karan Adani, the chairman of as well as the of ACC as well as the director, Ajay Kapoor, the CEO of the cement business, and Vinod Baheti, the CFO of the cement business, all of them will be present and will be answering investor queries.
Okay, all right, Vivek, thanks very much for that. Meanwhile, Karan Adani, CEO and whole-time director at Adani Port, says the company is well placed to deliver on the top end of the guidance.
In May 2022, we provided our full year guidance for FY23. We predicted FY23 revenue in the range of rupees 19,200 to 19,800 crores and EBITDA in the range of 12,200 to 12,600 crores. Today, I can say that with much confidence that we are well placed to deliver on the top end of this guidance.
All right, moving on, Ambuja Cement was up close to 2% in trade after reporting its better than expected quarter numbers. Nigel is here with the details on that.
Well, Ambuja Cement's numbers were good and there were no shockers that did come in from these numbers, and that's why the street did like it. The top line was a beat which percolated down to the EBITDA number, and that further came down to the profit number as well. What are the big points that played out and why was it a beat? One was the volumes were better than expected by close to around 250,000 tons. The management says their focus continues to remain on cost optimization as well as they're realizing some synergies from group companies. That's the reasoning that they have given. Besides that, premium sales as a percentage of trade sales, well, that was close to around 22% odd, which helps realizations as well as profitability. And also the other couple of aspects that stood out was, remember, they've done a warrant issue, which totals close to around 20,000 crores odd. Now they have said that in October 2022 itself, they're paid close to around 5,000 crores out of that 20,000 crores, which gives you some bit of confidence. And they've also gone on to state that they're considering appointment of independent agencies to look into compliance issues. Since the street is a little bit jittery, they've gone ahead and stated this as well. All in all, a good set of numbers coming in from Ambuja Cements.
Okay, all right, Nigel. Thanks very much for that. Time for a break now, but stay tuned. We'll be back in just a short while with all of the other top stories. Welcome back. You're still with us on Markets Today. Let's get to all of the other top stories that we're tracking for you this evening. The fourth headline today, Vedanta slipped in trade after sources told CNBC-TV18 that the government was opposed to Hindustan Zinc's buyout of Vedanta's global zinc assets. However, the stock recovered in the last hour of trade to close flat. Sources say the centre believes that the decision was not in favour of minority shareholders' rights and violated corporate governance norms. Sources also told CNBC-TV18 that exchange filings were done despite that government-appointed directors' objection to the transaction. Earlier today, in response to the story, Hindustan Zinc filed a clarification with the exchanges that the incorporation of international zinc assets was approved by the board and was an attractive opportunity for overseas growth. The company also said that it is not aware of any information that had not been disclosed to the exchanges. All right, moving on. Paytm was in focus. It jumped 5% following what was an upbeat conference call and a potential ban on other lending apps. Abhishek Kothari is here with the details.
Well, the company did have a con call in which the key highlights are that they expect the long-term payment process margins to stabilize around 5 to 7 basis points. So they see massive growth in subscription business, and there is massive opportunity in that segment for the company going ahead as well. The device run rate is about 30,000 every month, which is expected to improve further as and when the headcount actually increases for the company. So the financial services revenue now contributes about 22% of the overall revenue and is expected to improve going ahead as well. The guidance for lending business is that it will have a growth of 20 to 30% on a quarter-on-quarter basis. So it's on a sequential basis that they will see a growth of 20 to 30% over there. The company is planning to launch a UPI Lite app which will allow instant small value UPI transactions to take place. So there is potential for 10 crore merchants as well as 50 crore payment customers in the near term as well. We also have another development which has taken place. Now, industry sources have told CNBC-TV18 that MEITY is likely to send a list of digital lenders to be removed from the Play Store and Google as well. So they have recently blocked about 138 betting and 94 loan apps with China links for their alleged involvement in money laundering. So both these two developments have been working in favor of Paytm in trade today. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on Paytm. But the fifth headline today, Muthoot Finance was down over 2% in trade despite improved net interest margins and steady growth in assets under management. The gold financer witnessed contraction in gold tonnage amidst higher prices. Listen in to what George Alexander Muthoot, the MD of the company, had to say.
The pressures are coming down. We are able to grow our business. Maybe we have steadied the business. The AUM growth is steady. It's now steady. The profit is also steady. What we had a very good year last year. Now we are able to regain that profit, and hopefully this year we should be able to do better. Or next quarter we should be able to do better than this quarter. AUM has also started inching up. Probably the 1% can go up to 5%. That I think that is what we should see in the end of the year.
Okay, and moving on, Balaji Amines was down over 5% in trade after it reported what was a weak set of numbers. The company is also eyeing revenues worth around 4,000 crores by FY25, expecting contribution from new projects. Sonal is here with the details.
That's right. Balaji Amines posted a weak set of numbers, hit a 52-week low in today's trading session, and that was on the back of weak set of numbers. In quarter 3, revenues were up 4%, but EBITDA declined by 18%, leading to a margin contraction of almost 600 basis points to come in at 22%. Profits also for the company were down by 17.5%. The management said that the fall in margins was primarily on account of degrowth in the pharma and API segment. However, going forward, revenues will start kicking from the new projects that the company has announced, and that will lead to growth as well going forward. They said in the next year they are going to see improvement in raw material supply as well, and that is something which will improve margins. In fact, we spoke to the management earlier today. Listen in to what he had to say.
After commissioning these 4 projects, yes, we are aiming to touch 4,000 crores in 2025. See, FY23 we have guided around 2,400, but still we are ahead of 2,400. We'll be doing between 24 to 2,500 this year. And next year, 2024, it should be around 2,600 to 2,800.
Okay, so a weak stock reaction for Balaji Amines, but let's move on. The business data for the insurance industry for the month of January is out. The premium for the life insurance segment has risen by 20% on a year-on-year basis, while for the general insurance space, the premium is up by 19%. Yash Jain is here with the key highlights. Yash.
Well, Ekta, first of all, of course, a good, strong number from the life insurance industry. The industry growing at 20% on a year-on-year basis, up to Jan growing at 30%. And this time, contribution has come from both LIC as well as private players. The strongest contribution came from HDFC Life. January premium grew 20%. Premium up to Jan was up 7%. The retail AP in January was also up 17%. ICICI Prudential Life, January premium up 14.5%. Retail AP just about 1% gain. Max Life January premium up 14.5%. Retail AP grew about 9%. SPI Life January premium grew at 32%. The January retail AP also saw a growth of 7.5%. LIC, the premium in the month of January was up 20%. Up to January, also the premium is up about 14%. As far as general insurance data is concerned, there was a strong bounce which was seen in New India Assurance. New India Assurance January premium grew by 42%. The premium up to January was also up 6%. For ICICI Lombard, the premium in the month of January is up 16%, and up to January, about 20% growth seen in the premium for ICICI Lombard.
Okay, all right, Yash, thanks very much for that. So that's on the entire insurance space. But with that, it's a wrap on this edition of Markets Today. Thanks very much for watching.